Hey traders, this is Ron Haidt at Market Tamer. Happy Football Sunday. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Always be addressed with your financial advisor. We'll start out here with the Qs, the NASDAQ 100 ETF. And we're down a little bit on Friday. We were actually down 4 out of the 5 days this past week, but there's just not a lot of technical damage being done. Here's the old channel I had drawn in black. And we're just ebbing and flowing here higher. We're pushing to higher highs. We're sticking with higher lows. Keep in mind the orange line right there. That is the 50-day simple moving average. That is an institutional moving average. As long as we stay above that, it's viewed as bullish. If you're below it, it's no longer bullish. It's not bullish. Doesn't mean we have to go bearish, but it's telling you that a trend change might be occurring. We've seen volume pick up Wednesday, Thursday, and Friday. But again, we're not getting down a whole lot. So I'm going to keep watching this each day. Right now, the 50 days at 179.68. So we're about $1.50 still above it. If we close below it and we close near the lows of the day and there's a pickup in volume, I think that could be telling us, hey, there's going to be a change in that bullish sentiment right now. So just let's keep an eye on that. So I'm going to go from weakest to strongest. Second weakest has been the IWM, which is the Russell 2000. The small caps, and the IWM was down just a little bit. It's basically right on the 20-day EMA in red, but given this consolidation we had in June and July and the earlier part of this past month, even if it comes down a little bit, it's not as big a deal as if the Qs were to break the 50-day. It would just go back into a trading range. The SPY, which I have a long-term bullish position in, I go ahead and zoom in here. It's also down 4 days of the 5 last week, 4 in a row, in fact. We're just above the 20-day EMA in red. Now, last time we got below the orange line and we played hot potato, and I've talked about that a few other times. That would be the next major target. As long as we stay above there, it's sort of like the Qs. The ebb and flow continues. So I'm not going to get overly worried if we get below the red line, but if we get below the 20-day EMA in red, it does raise that yellow flag and say, hey, this is the S&P 500. It's 500 companies. It's not looking that great right now from a day-to-day bullish perspective. Maybe we just go neutral on the day-to-day and then see what happens if we do come into the orange. Now, hypothetically, let's just say Monday or Tuesday, we have a nice big up day, and that gets us back up here. Well, then it goes right back to being bullish on the daily charts. And then if I look at the Dow, the Diamonds ETF, DIA, it's just been having pretty much like a doji festival. All last week was basically doji, doji, doji. It's holding up arguably the best. It's still not at new all-time highs. If I go back here, we're not at new all-time highs, but compared to the other indexes, holding up pretty decent. So if you put all this together, remember about 10 days ago, I said to you, maybe like 2 weeks ago, that once Labor Day arrives, that's usually from a seasonality perspective, a temporary high. And that's, if I go back to the SPYs, that's exactly what we're seeing. The high was on 8/29. If I bring you into a calendar and show you 8/29, that was Wednesday. Labor Day was Monday. So seasonality right on the money. And now we're just, drifting lower in a very orderly fashion. Typically between now and the end of September, we remain, sort of neutral to weak. Again, that is seasonality at work. Now, this past Friday, I did an event. We maxed out attendance. The registrations were off the chart. And I've been getting a ton of emails asking for another chance to see how this seasonality works, where I can show you, based on hard proven data, the top stocks going into year end. Because the best time of the trading year is coming real fast. And there's no better time than now to get ready for it. So at the bottom of this video, there's going to be a link you can register. I'm going to go live this Wednesday on the 12th. At noon Eastern one more time. I'm not going to record it. Got to be there live to see it in action. And we'll actually go through how these setups occur, why they occur, and I'm going to unveil to everybody which are the hottest, and I'll also tell you some of my own favorites as well. So make sure you register for that. And once you're in, do not leave the webinar because you could get locked out due to the 500 seat limit. So let's take a look at Facebook. Now, Facebook was up on Friday. It's coming into this, not yet, but into that support zone, low to mid 150s. At some point, I would expect Facebook probably to bottom. The advertisers are not going to run away. I've talked about that before. They have some issues right now. As long as Facebook allows the exploitation, if you will, of all their users, it's good for business. Might be bad for privacy, but it's good for business. So watch for a turn here. Right now, though, the trend is still down technically on Facebook. Apple, this is going to get tied to the Qs as well. Let's go ahead and zoom in here. 3 straight down days, volume's picking up just like the S&P, but the 20-day EMA in red would be the closest support level. Right now, that's at 217 and change, like $4 lower. We get below the red line, that would also be a sign that, you know what, the overall market looks like it wants to pull back a little bit. Now, if we can actually get a pullback between now and the end of September, beginning of October, one more time, it just sets up for the usual buying binge that happens going into the middle of December. It's why I call it the best trading time of the year. It's absolutely phenomenal. So knowing which stocks are going to outperform is going to be key in trying to have a great holiday season. But I'm loving the pullback right now, frankly. Is there anything wrong with Apple's chart? Nope, it's coming back in an orderly fashion, in my opinion. How about Amazon? Amazon's down 3 days in a row. It's right at the red line. If we get below the red, we go to the orange. Now, if Amazon closes below the orange line, that would be noteworthy or newsworthy. As of right now, it's just a little bit of profit taking. And frankly, if you go from an all-time closing high of 2,039 and you're only at 1952, that's hardly even a pullback, frankly. Tesla has issues, and I've been saying this for how long? It's just all over the place, even over here. Elon Musk apparently is going off the rails a little bit, or maybe more than a little bit in his actions. So this stock could explode up or down. If I was trading this stock, which I'm not, I would be collaring this thing just to lock in capital, because while making money is important, it pays the bills, capital preservation is way more important. And as of right now, even if you look, let me just zoom in here. Even if you look at that type of hammer stick candle, I hate hammers at support. I call them fake hammers. The next thing he does could send this stock ripping higher or lower. I mean, he could be, I'm guessing here, but I've read reports that he could be even kicked out of the company or kicked off the board, things of that nature. Whether or not those are true or will come true is irrelevant. Just the idea that it could happen is sending the stock into, crazyville a little bit. From a short-term trading perspective, it would only be capital I could literally flush down the toilet and not need, because it's just so erratic. Just heads up, if I had it, I'd want to collar it and just preserve the capital until this thing calms down. Here is TSRO, which is TSRO or TSRO. Long-term downtrend. I said if it gets above the 50-day, I want to keep an eye on it. The 50-day was 35.28. We closed at 79. We're above it. Volume did pull back. I'd like to see one more close higher. Make me feel a little more confident, because we did have a break here and there was no follow through. So this time I want follow through. And if we close near the highs of the day, upside target would be these old highs and even the 200-day. So I want to keep a close eye on this guy. Now, a couple others. I'll make the video a little longer today. Here is TROW, which is T Rowe Price. You've been riding, if you've been following this stock, you've been above the purple line, which is the 200-day SMA, for a very long period of time. Well, look what just happened. Spike in volume, gap and close lower. And at the lows of the day. There's got to be some support, $2.50 lower, and then again at 100. So the downside targets aren't huge like they are in some other videos that I do with you guys. However, this is showing you there is a sentiment change in terms of buying and selling. Spike in volume, close below a major institutional moving average. If I was short-term bullish on this stock, I would have to completely reevaluate that. Collar trade, at least a married put situation. Or if I just wanted to dump shares, I could maybe consider doing that too, because the idea of it just higher highs, higher lows, this is now over. We violated horizontal support at 115. That actually happened on Thursday. But because the stock was so close to the 200-day, you can make an argument and say, well, we haven't been below the 200-day in such a long time. Let's see if that happens. And look, first attempt, it was just, sold off really hard. A definite change in trend there. Abercrombie, sort of the same thing. The last time it was playing around with its 200-day moving average was November, back at the old holiday season a year ago. Well, look what happened this time. You have previous support-ish around 2250. We get below it on the earnings gap down, and then what happens? We trace out a bear flag. Sideways action cannot get above the 5-day EMA in blue or the 200-day, which is your institutional moving average. Friday, gap lower, or actually just barely opened lower, but then closed the lows of the day. This is also showing a sign that the trend is turning. The bulls are no longer buying the dips, they're now looking to sell. Downside targets, it's not that bad, maybe 20, 30 cents lower. Then there's consolidation down here. Then there's a gap fill all the way down at 12.50. I'm not saying it's going to get there, but between T. Rowe Price and Abercrombie, these are signs. This is what it looks like when you say, how does a trend change look on a chart? How do we know if the buyer's no longer buying and the sellers are winning? These are two perfect examples. We have now violated major moving averages, closing at the lows on above average volume. And last but not least is Twitter. Apparently Twitter and Facebook are banning just people they don't like, which is okay if you're on one side, not okay potentially if you're on the other, but this is not a political video, right? What that means is you could be upsetting half the people, and that's bad for business. Twitter, as a result, is now starting to sell off, although we're just barely below these lows here around 30.50-ish. There's more support down here. But again, just like T. Rowe Price and Abercrombie, Twitter is now also below the 200-day. So the short-term and even medium-term bullish plays here, in my opinion, are over with. And medium could be a multi-month trend. This is now a definite change. If support around 27.50 falls, you're down towards 22.50. What would it take for Twitter to be looking bullish on the charts again? We'd have to come back up and take out this previous high. That's up around 36. That's 20% higher. So this stock needs 20% upside just to go back having a chance at looking bullish on the daily chart. And then we got to get into the gap at 37.50 to go back to 42.50. So the bulls on the daily chart are gone from here. So I hope you found this video helpful. It's a little longer tonight, almost twice as long as some of the other videos. But please keep in mind, I'm going to be going over the hottest stocks for year end. If you ever bought a stock and wondered, how did you manage to pick the one stock that didn't move? This is the information you need to see. Stocks like Adobe and Netflix are typically not rock stars at the end of the year, but I can give you a host of stocks based on their own data that have had amazing years. 80%, 85%, 90% of the time, they have a tendency of rising based on their historical data. That is the hot list. That's the shopping list. And I'll be sharing that with you on Wednesday, September 12th. Noon Eastern, 9 a.m. Pacific. Have yourself a great day. And again, happy Football Sunday. See you in the next video.